Today, we're diving deep into one of the most talked about stocks of 2025, Intel. Is this chip giant ready for a comeback, or is it still stuck in the penalty box? Let's break down the numbers, the challenges, and the opportunities, so you can decide if Intel deserves a spot in your portfolio. First, let's set the stage. The US economy in 2025 is a mixed bag. Growth is slowing, inflation's still a headache, and the Federal Reserve is keeping interest rates high. That means every dollar counts, especially for big manufacturers like Intel, who are juggling rising costs and global competition. Now, the semiconductor sector is booming in some areas. Think AI, data centers, and cloud computing. But it's a tale of two markets. While AI chips are flying off the shelves, traditional PC chips, Intel's bread and butter, are facing sluggish demand and fierce competition from AMD and Nvidia. How is Intel doing? Not great, not terrible, but definitely in transition. In Q1 2025, Intel reported $12.7 billion in revenue, basically flat from last year. But here's the kicker. Profits are still elusive. They posted a loss of 19 cents per share on a GAAP basis, and their guidance for Q2 isn't much better, projecting revenue between $11.20 and $12.4 billion, and possibly breaking even on earnings. For all of 2024, Intel's revenue slid to $53.1 billion, down 2%. The company lost money last year, over $4 per share. But here's the twist. Analysts expect a recovery in 2025, with revenue potentially rebounding to $55.8 billion and earnings per share climbing back to 98 cents. That's a big swing, but it's not a slam dunk. The new CEO is shaking things up. Intel's slashing operating expenses down to $17 billion this year and $16 billion next year. They're also trimming capital spending, focusing on efficiency, and rethinking their manufacturing strategy, even talking with TSMC about possible partnerships. It's all about getting leaner and meaner, but the competition is brutal. AMD is eating away at Intel's PC market share, and Nvidia dominates the AI chip world. Intel's foundry business is trying to catch up to TSMC, but it's an uphill battle. The big question? Can Intel innovate fast enough to stay relevant? Intel's product pipeline is the wild card. They're betting big on next-gen AI chips and server processors, with launches planned for late 2025 and 2026. If these chips hit the mark, Intel could claw back some market share. If not, the pressure only gets worse. What about the stock? Intel is trading around $20, down over 60% from its 2023 highs. Analyst price targets range from $18 to $22 for 2025, with most experts rating it a hold. The PE ratio is high due to last year's losses, but if those profit forecasts come true, it could drop to a more reasonable 15-17x earnings. Still, the market is skeptical, and sentiment is bearish. Bottom line, Intel is a classic turnaround story. The fundamentals are stabilizing, the new CEO is making bold moves, and there's a glimmer of hope in the product pipeline. But the challenges are real. Competition, execution risk, and an uncertain economy. If you're an investor who loves a comeback story and can stomach some volatility, Intel might just be worth a closer look. But if you want a sure thing in the AI chip race, you might want to keep watching from the sidelines. What do you think? Will Intel stage a comeback, or is it game over for this chip giant? Drop your thoughts in the comments, hit like if you found this breakdown helpful, and don't forget to subscribe for more real talk on the hottest stocks.